Module 8B, B6, line 126. If buyer has timely provided either written notice provided for in paragraph 8B3 above, and buyer thereafter fails to close this contract, the deposit shall be paid to the seller unless failure to close is due to 1. Seller's default or inability to satisfy other contingencies of this contract, or 2. Property-related conditions of the loan approval, specifically excluding the appraisal valuation, have not been met unless such conditions are waived by other provisions of this contract, in which event the buyer shall be refunded the deposit, thereby releasing buyer and seller from all further obligations under this contract. So if the buyer got the notice that they did get loan approval and they moved forward, yet they still failed to close, what happens?
Okay, so there's essentially a few outs for the buyer in which they can sort of get their deposit back and keep it safe. So if the seller defaulted, they're just not performing, they said they don't want to sell their property more, the loan approval is really irrelevant, and the seller defaulted, the buyer can reclaim their deposit and go their separate ways or take some other steps that we'll go over later.
Right, it depends on what the situation is.
So it's either seller default, or the seller's unable to satisfy other contingencies. And then the other out, essentially, would be if the lender is unable to satisfy property-related conditions. Now, property-related conditions is not just defined. It's not a defined term in the contract. There's a consensus that it includes, obviously physical conditions with the property. Also, condominiums not having reserve accounts, there's a consensus that that would be considered a property-related condition. And therefore, the buyer would be able to get their deposit back. It's explicit, though, that a property-related condition is not the appraisal, so that's really important.
Right.
And there's a consensus that the property-related condition is obviously the physical condition of a property, and that there's a consensus that a condominium that has low reserves would also be considered a property-related condition. The caveat there is that those property-related conditions must be part of the loan approval, and that seller will have an opportunity to ask for that loan approval and what those property-related conditions are, so they're not completely blindsided. It's explicit, though, that a property-related condition is not defined to include appraisal.
Right, and this is, I think, where sometimes people misunderstand, and a buyer may say, it didn't appraise, so I'm getting out due to the financing contingency. I'm gonna get my escrow back, right? So that's not always the case, because even though it didn't appraise, they still may qualify for that loan.
Exactly. So things have changed with this new version of the contract and the last version, that there's no longer this trailing separate appraisal contingency that in the event the property didn't appraise and you're still outside of your loan approval period, that you can cancel. So now loan approval is specifically defined to include that you meet the financing requirements as specified in section 8A. So whether it's conventional, FHA, loan, the interest rate, whether it's going to be fixed or adjustable. So those terms, along with having their appraisal received. So the appraisal is now included in what is defined as loan approval. So it wasn't always defined that way, and there was this trailing appraisal contingency that was, I don't think, purposefully built into the contract. It was sort of an out that allowed a buyer to terminate the contract because the property didn't appraise, and it was a property-related condition, and they could terminate even if they were outside of their loan approval period. That does not apply here. So
if in the event, it is very important to your buyer that the property appraises for the value that they've put down that they're willing to pay for this property, you should have an additional addendum, an appraisal addendum, added into your offer package.
100%. Whether it's this is really going to come into play when it's a matter of principle. So there are scenarios where a property will not appraise, but your buyer will still obtain financing. So if you have a buyer who has a lot of cash in the bank and they get a good interest rate, that the lender evaluates and underwrites and says, hey, you can afford this, it didn't appraise, we're gonna lower the loan amount, you're gonna cover the difference, and we can get you loan approval. Just to be extra clear, when we're talking about this appraisal, it's really important. I'm gonna go back to the contract and I'm gonna bring you back up a little bit. And we're gonna go back to section 8B lines 95 and 96. And it states that a buyer's mortgage broker, as part of what financing is and getting this loan approval, the second half of loan approval, aside from meeting the terms of the loan we're going to specify, it also says that the buyer's mortgage broker or lender, having received an appraisal or alternative valuation of the property satisfactory to the lender, if either is required by the lender, which is sufficient to meet the terms required for the lender to provide financing for a buyer and proceed to closing. So I'm making this abundantly clear because I have people call me all the time and they're like, well, it didn't appraise, so we're not going to get financing. That's not true. This is explicit. The appraisal just needs to be satisfactory to that lender. It needs to be satisfactory for them to be able to give the buyer a loan. So if the appraisal comes back under the purchase price, it's not an automatic we can back out. There are certain things that would lend to that. So let's just say you had a buyer who had really limited cash to close funds. And your lender obviously knows that. So when underwriting this transaction, your
It's going to affect their qualification. They're not going to be able to qualify to close. So of course the lender's going to know that.
And the lender's going to say, okay, you don't have enough cash to cover the difference. Therefore, I cannot, approve this loan, and it's not satisfactory. But if you have a buyer, like I said, a buyer that is sitting on cash,
and the lender knows that because they see all their financials.
Exactly. The appraisal does not have to come in at purchase price. They're just going to adjust their loan amount. Their LTV will be 75, 80%, whatever it was that we specified of the appraised value. And that loan is going to get approved. So if your buyer, as a matter of principle, does not want to overpay for this property, it's so important you include an appraisal contingency. The appraisal has nothing to do with your purchase price.
And nothing to do with being able to get out of your financing contingency.
100%.